explore the secrets of the legendary investor Peter Lynch. What are the key criteria that made him one of the most successful fund managers in history? In today's video, we will delve into Lynch's unique philosophy, uncovering how he selected winning companies. Discover the strategies, principles, and potential investment choices Lynch would make today. Get ready for a journey of valuable insights. Don't miss out. Peter Lynch. How to invest for beginners. Subscribe now to not miss any valuable tips. 5. Peter Lynch's investment criteria. Renowned mutual fund manager Peter Lynch emphasized 5 fundamental criteria when making investment choices. His methodology began with the premise of investing in familiar sectors, where the investor had a deep understanding, using the maxim, invest in what you know. Additionally, Lynch sought assets offering growth at a reasonable price, carefully assessing the price-earnings ratio. For the distinguished manager, trends were not allies in investments. On the contrary, he preferred exploring opportunities in less popular companies, often overlooked by the market. The second pillar of Lynch's strategy lay in favoring smaller companies. Believing that small corporations had more potential for significant movements, he argued that while large companies exhibited modest moves, smaller ones had the potential for more significant variations. Lastly, the fund manager greatly valued a strong balance sheet. For Lynch, understanding a company's balance sheet was crucial, and he avoided companies with high levels of debt. This attention to the balance sheet included an analysis of available cash, as solid financial backing provided a safety margin that Lynch deemed essential. 4. Lynch's career and success. Peter Lynch, born on January 19, 1944, became one of the most notable mutual fund managers in the history of the financial market. A landmark chapter in Lynch's career was managing Fidelity's renowned Magellan Fund from 1977 to 1990. Under his insightful leadership, the fund recorded an impressive average annual return of 29.2%, setting a standard of remarkable performance. The 13-year period at the helm of the Magellan Fund was marked by Lynch's ability to consistently outperform the benchmark, the S&P 500. In a notable feat, he achieved this success in 11 of the 13 years of his management, standing out as one of the few managers to regularly surpass the performance of the widely recognized index. This sequence of successes solidified his reputation and contributed to his rise to the pantheon of the most successful investors in history. 3. Lynch's investment philosophy. Peter Lynch's investment philosophy is meticulously outlined in his 3 influential books, delineating a set of principles that proved fundamental throughout his remarkable career. His approach emphasizes the use of knowledge as a compass in choosing investments, advocating the maxim, invest in what you know. Lynch highlights the importance of investing in sectors understood by the investor, a strategy he considers crucial for identifying growth opportunities. Another crucial pillar of Lynch's philosophy is the careful consideration of the price-earnings (PE) ratio, a metric he deeply values. Evaluating the relationship between the stock price and the company's earnings is seen as an essential measure to determine the attractiveness of a stock in terms of value. Furthermore, Lynch discourages following popular trends in the market, opting to explore opportunities in smaller and often overlooked companies, believing that these may provide a greater margin for significant gains. The fund manager also places significant weight on analyzing a company's balance sheet. For Lynch, a profound understanding of corporate finances, particularly the avoidance of companies with high levels of debt, is essential. This emphasis on the balance sheet includes evaluating available cash, highlighting the importance of financial backing as a vital safeguard in his investment choices. These cohesive principles form the backbone of the investment approach that significantly contributed to Peter Lynch's enduring success in the financial universe. 2. Lynch's key investment principles. The fundamentals of Peter Lynch's investment method are crucial to understanding the strategies that guided his successful choices throughout his notable career. The first principle highlights the importance of investing in areas that the investor understands intimately, as expressed by the maxim, invest in what you know. This approach underscores the relevance of choosing investments in familiar sectors, where the investor can apply practical and insightful understanding. Another crucial principle is the meticulous consideration of the price-earnings (PE) ratio, a metric that Lynch deeply values. Evaluating the relationship between the stock price and the company's earnings is seen as an essential measure to determine the attractiveness of a stock in terms of value. Avoiding blindly following popular trends in the market is another key point, with Lynch preferring to explore opportunities in smaller and overlooked companies, which often escape conventional market attention. Preferring smaller companies, as emphasized by Lynch, is an extension of his belief that these entities have a higher potential for significant movements compared to their larger counterparts. Lastly, thoroughly evaluating the financial health of a company, with a special focus on the balance sheet, is an essential practice in Lynch's principles. This last principle involves not only avoiding companies with high levels of debt, but also considering available cash as a critical indicator of a company's financial strength. These cohesive principles form the backbone of the investment approach that significantly contributed to Peter Lynch's enduring success in the financial universe. 1. Companies Lynch would buy today. Considering Peter Lynch's investment philosophy, we could speculate on the companies he might find attractive today. Some examples include Masabi Trust, Alpha Protech, and Fresenius Medical Care AG. These companies seem to align with Lynch's criteria, reflecting his approach to seeking opportunities often overlooked by the conventional market. Lynch's methodology involves identifying opportunities that escape general attention, a particularly notable aspect in companies like Masabi Trust, where its focus on trust and sustainable growth could attract his interest. Additionally, Alpha Protech, with its specifics in the protection sector, might be seen as a choice that aligns with Lynch's preference for companies that control their markets, even if they are less recognized. Lynch's careful evaluation of a company's growth potential would also be evident in considering Fresenius Medical Care AG, highlighting the importance of choosing companies with a healthy balance between price and future prospects. Furthermore, his aversion to large institutional holdings may influence the analysis of these companies, emphasizing Lynch's desire to avoid overly popular stocks. In this way, when considering the mentioned companies from Peter Lynch's perspective, it is possible to discern the ongoing pursuit of opportunities that, while perhaps not in the spotlight, present significant potential and align with the distinctive investment principles of this renowned manager. Hey, enthusiastic investors! I hope you enjoyed unraveling the secrets of Master Peter Lynch as much as I did. If this dive into the strategies of the legendary manager has illuminated your path in the world of investments, leave your like to strengthen this learning community. The conversation doesn't end here. I want to know, which Lynch criterion resonated with you the most? Comment below and share your thoughts. And don't forget, for more insights and valuable investment tips, subscribe to the channel and hit the bell to not miss any exclusive content. Together, let's tread the path to financial success.